So today I'd like to share with you a December 2021 market update. Now it's no secret, 2021 has been a big year for property. And I think there's not too many areas that you could have bought in 2021 and done badly in. But as always, there's been certain areas that have outperformed others. And the reason that Reventon has been able to achieve that for our clients is our team who do the research. Now that's thousands and thousands of hours every year researching on the next big area for our investors to buy in. Let me give you a quick update of what's been happening here in Victoria. In places like Geelong and Ballarat, the market has been booming. Now we have seen this mass exit from the capital cities across Australia, being those that have been in significant lockdowns. Sydney and nowhere has been impacted more than the world record holding for lockdown city, Melbourne. So we have seen more exit from Melbourne than ever before, and those areas outside of metropolitan Melbourne have experienced significant growth this year and demand. So places like Geelong has increased in the last 12 months 29.7% in capital growth. Ballarat shortly behind that at 25% capital growth over the last 12 months. Now record low vacancy rates in both areas as well. 1.1% vacancy rate in Ballarat and 2.1% vacancy rate in Armstrong Creek. Now those markets we're not selling in any longer because we've seen that rapid growth over the last 2-3 years, but it's just great to see that our investors have experienced such fantastic gains in these markets. When we look forward to the future trends, we do have some new hotspots that we're talking about, and they are still regional locations here in Victoria. There's a couple of pockets around metropolitan Melbourne that are also really exciting, and we'd love to have a consultation with you to explain exactly where you could be looking to invest right now to get those capital gains that I just mentioned for Ballarat and Geelong, to be able for you to see that into the next few years as well. So that's just a quick market wrap on what's been happening here in Victoria. If we move into state now, it's very hard to avoid property investment conversations that don't include Southeast Queensland, and in particular Brisbane. There has been that mass exodus from Sydney and Melbourne, and many people who can now work from home have made the decision, well, let's live somewhere where the climate's better. Let's have a pool in the backyard and actually be able to use it. So there has been many people that have picked up and decided to move north to the Sunshine State. Southeast Queensland is booming, in particular around Brisbane, Sunshine Coast, Gold Coast. Those markets have been incredibly popular, and we've seen a dramatic rise this year in property prices. Particularly for our investors, we've been recommending areas around the Springfield location, and our investors that have purchased within the last 12 to 18 months, they've experienced up to 18% growth year on year with capital growth. So it's really exciting for those investors who got in at the right time to be able to capitalize on that capital growth that's been experienced. And there has been a lot of migration moving north as well. So those numbers, about 2,500 people every week move into Southeast Queensland. So the borders have been shut, yet that domestic migration has been really popular. And that, as I mentioned, Southeast Queensland being that beautiful, desirable place to live has benefited the most of the domestic migration across Australia. So we have had some new markets in Southeast Queensland that we've been recommending late this year as well. So again, if you'd like to find out the next hotspot to be able to take on that growth that I've mentioned our clients have had already this year, please contact one of your consultants today and we'll arrange a no obligation chat for you. There hasn't been a market with stronger rental yields this year than Canberra. So the population isn't large like it is in Melbourne and Sydney, but the income, which determines how much rent an area is going to get, is now the highest anywhere in the country. So the income per capita in the ACT has now knocked off Sydney as the highest income earners in Australia. So the rental market is incredibly strong. And as I've mentioned previously, depending on what your goals are, but if cash flow is important to you, then the market in ACT is really exciting. It has been for some time, but I don't see that changing in the near future. So if cash flow is important to you, the ACT is a market that you should be sitting up and taking notice of. So the last area I'd like to share with you all today is Adelaide. Now, South Australia has been behind the other capital cities being Melbourne, Sydney, Brisbane for some time. However, not this year. This year has been Adelaide's year, and moving forward, we see Adelaide as a fantastic investment option for our investors. Now, the Reventon model is to keep people's investment level low. We don't want you to be going out and spending $1 million, $2 million to buy an investment property. We want to keep that around $500,000 because that's the range that we know we can get you a really strong rental return and in high capital growth areas. So the market in Adelaide is perfect for investment right now with sub 500 purchase price properties. It's a market, again, you need to sit up and take notice of. The Adelaide market has boomed in the last quarter of this year, and the forward projections are for really strong capital growth into the next few years. Adelaide will be one of the biggest areas that we're spending our time on next year. So please, if you'd like to find out exactly where you should be looking at in Adelaide, it's a big area, exactly where in the market, please book a time with one of our friendly consultants and we'd be happy to go through that in detail for you. So if we look at the market just in general terms, people are talking about the interest rates rising, and that is something that is going to happen in the future. We can't keep it at this record 0.1% forever, so interest rates will rise. Now, the RBA has come out to say that interest rates won't rise next year. They will rise in 2023 or 2024. So we're not expecting a massive rate rise, and when we do see a rate rise, we're not expecting it to be large anyway. It will rise, and it has to rise, I suppose, is the reality here. So we are advising our investors just to make sure that you do have enough money to be prepared when the rate rise does come into effect as well. We look for high capital growth areas, but we also focus on strong rental yields. We focus on achieving $1 for every $1,000 that our investors spend. So on a purchase price of $450,000, we try and get very close to $450 a week rent. Now in that scenario, that is cash back coming into people's pocket every single week. So even if interest rates rise slightly, they're still going to be cash flow positive properties. So the rate rises are expected. Now I believe they've come in to try and cool the hot market that we have at the minute. So for the team here at Reventon, the market still looks promising. Even though there is talk about interest rates rising and the market cooling, we're not seeing any signs of that in the areas that we are recommending. If anything, we're expecting huge growth into next year as well. So it's about getting the right information to be able to make an informed decision. So book a consultation with one of our specialists here at Reventon to talk about where you could buy right now to make sure you capitalize on the continued growth expected into 2022 and beyond.